Great. We should be live. A wonderful Tuesday, everyone. Hope you're doing well. I know the market has been quite punishing. We've had, I think, 8 weeks, 7 weeks of red weeks in a row. Quite a new scenario. We've not had this in the past, and we're going to talk about this, and we're going to see then another bearish week. It's been a bit of a resemblance of the stock market. We've seen this there as well. And yeah, want to share a bit of some food for thought there. Maybe some perspective, some general ideas. We're going to discuss this. We do this on a regular basis on Tuesday, always 12:30 Europe time, 6:30 p.m. here in Singapore, 6:30 a.m. Eastern Standard Time. My name is Julian. I'm the CEO and co-founder of Cake DeFi. And we also have Fabio on the call, who is leading all our community efforts. Fabio, how is everything going?
Hey, good day. Here in the Netherlands, it's about midday. Things are going great. Maybe not in the general markets, but in our community, things are very quiet at the moment. And I can kind of enjoy times like this as well, because the productivity, especially if the price goes sideways or downwards, is a lot higher, I have to say.
Okay, let's kind of dive in, because I think that's the main topic, and we're gonna talk about that a bit. What's happening in the community from a sentiment standpoint? How do people kind of see these bearish weeks at the moment? I mean, looking at the general markets today, the general stock market is going to open quite bearish again. I think, yeah, people are expecting a downtrend again. Is this gonna last? What do people say on Twitter? What do the technical analysts, specialists kind of talk about? How do you see that?
The sentiment in general is definitely bearish, definitely. Like the larger polls, it's slightly more than half, 65% of the users on Twitter seem to be bearish. Same on Telegram. If you follow a little bit of the bigger polls, you still have like classical TA hopium dealers that promise that this is the bottom and we are going higher from here. Those tweets are still out there and they still get a lot of likes. But if you look, for example, at Plan B or at Benjamin Cohen, those are pretty much or one of the biggest YouTubers, and of course everybody knows Plan B, the stock to flow guy. And both of them actually are super bearish. Plan B made a poll and he asked, hey, what is the better strategy to go from here and to think 30K is the bottom, or 29-ish K is the bottom, and start slowly entering right now and just hodling, or waiting for lower prices that may or may not come? And I think 67% or 68% of the people agreed with the tactic of getting exposure now, starting to slowly enter at 29K-ish levels. And if the prices go lower, you can always buy more. And in the long run, he also had another poll where he said, hey, where will the Bitcoin price be in 5 years? And think about the poll had 4 options, and the option who won was, I think, 500K in 5 years. So there's still long-term bullishness and I guess a lot of short-term bearishness.
Wow. Okay. Quite interesting to hear that. Okay. And where does like, what do the chart analysts kind of say? Where does their hopium come from? Is that purely because we are oversold, or because this has never happened before, or what's their kind of bullishness?
So as you said in the beginning, we had 8 red weeks in a row. That never happened before. We got 6 red weeks in January 2018, January 2019, I think. And that was the longest downtrend measured in time. So the correction that we got was actually not that big, but it's just continuously we're consistently moving to the downside. I reached out to a few people that I highly value their opinions. So some are longtime customers at the company that I'm in contact with. Others are good friends of mine. And I asked them for their opinion on, and please share some TA. And actually, a lot of them are super bearish. They think so. We have, if you look at a weekly time frame, we have 29,400 would, like, if we close the week below that, that would be kind of bad, because then there is no more support on a weekly time frame until like 19,000, and the other one is, I think, at 13,000. So this is just looking at a weekly scale. Of course, the important indicators are especially the moving averages. Normally, the 200 moving averages, which sits at 22,000, was long time support and very much possible. And this would also kind of correlate with the all-time high that we reached in 2017. So these are definitely the price level to look at. But nobody can tell you, because this cycle, let's call it a cycle, was different than the ones we had before. There was no blow off top. We didn't overshoot on the upside. So there is a lot of people that say, because we didn't overshoot on the upside, we're also not going to overshoot on the downside. So there is, I guess, a mixed sentiment, but a lot of people are expecting prices to retest maybe the 25-ish area. Me personally, I tend to agree with the poll that Plan B made. Everything below 30,000 is actually great value. And if you look at some on-chain indicators, like, for example, whales are currently accumulating. You have the hodl waves, you have the Mayer multiples. A lot of indicators are actually telling us that Bitcoin is probably at fair value. Maybe even some would say it's even cheap to buy in right now.
Yeah, I would actually tend to agree. The big question obviously is, I mean, I'm a person, I don't believe in a lot of things that a lot of the YouTubers and influencers believe. I've always been quite skeptical of the four-year cycle theory. I know we had another 4-year cycle, and I still think this has actually nothing to do with each other. It's pure coincidence. It's not, there's no like actual kind of proper correlation there of the 4-year Bitcoin cycles. I don't know. You know that I'm not a believer at all of technical analysis. I struggle with a lot of these phenomena for the simple reason because I always believe the real world makes the chart. It's not the chart that makes the real world. And so looking at all of that, looking at the sentiment of people, looking at general, like where is realized market cap for Bitcoin. So that to me is a very significant impact because that's the actual money that flowed into Bitcoin, right? So it's not a market cap that you calculate based on the latest trading price. It's actually the dollars that flowed in. And that actually puts Bitcoin at around $26,000. You look at the 200-week moving average. I'm sure that's, again, a market sentiment or an indicator, and that indicator doesn't make the real world. The real world makes the moving average. But still, all of these very long-term kind of factors, especially the kind of realized market cap that puts Bitcoin at around 26,000, I think that is a very relevant number because that's actually the dollar number that's in Bitcoin. And it tends to be very difficult for something to actually drop in market cap, calculate market cap below the number of dollars that are actually in something. It's not impossible, but it gets really unlikely. So the biggest question is not so much, in my opinion, are we at the bottom? I think that's the wrong question to ask in general. I think the better question to always ask yourself, and bad questions lead to bad answers lead to bad decisions. Great questions lead to great answers, which or can lead to great answers that can lead to great decisions. And then the last thing that you need to do is kind of execute on that decision. So let's ask ourselves a better question. And for you as an investor, and again, I think you know that as an investor, I posted it on Twitter and people always make fun of me when I say that. But as an investor, you want to be a mercenary that bets on the missionaries of your investments. So what does that mean? That means as a mercenary, all you're driven by is money. And in this case, you're driven by purchase power. You have no loyalty, right? And in theory, a good investor has no loyalty. A great investor has only loyalty to his or her purchase power. Now, I know this is going to hit some of you like the wrong way because some of you are maximalists of one coin, or you believe big in crypto, or you don't believe in crypto, whatever, right? So, but the best investors, they have no loyalty. They're purely driven by purchase power. And so the way they do this is they bet on the missionaries. So they bet on those really crazy people, the camps, the crowds, the tribes of an investment. and they bet on those, right? This can be a company, this can be a community, whatever this is, right? And so, and I think like betting on the crypto communities is so interesting as an investor because, I mean, these, the tribes, the tribalism in crypto is extremely strong. So it's actually fantastic to bet on those things. So as a great investor, you actually need to ask yourself this question: does it make sense to allocate your purchase power right now into one of those tribes, into one of those communities? And do you have a high expectations, or do you have a high sense of certainty that you are able to draw more purchase power out of that decision in the future? So it has nothing to do with, are you able to time the bottom? Are you able to time the top? The only question you need to ask yourself as a great investor is, if you allocate purchase power right now, do you have a high kind of degree of certainty that over a certain time period, you can actually draw more purchase power out of that? That's the only question you need to ask yourself as an investor. Obviously, if you were able to time the bottom, you would have the guarantee for that because that's the bottom. But let's be real here. No one is able to time the bottom, or no one is able to time the top. This is all just like talk, and people love to kind of say that they did, but it's basically all just bullshit. So that's the question you need to ask yourself. And then, so the question is, with what degree of certainty do you think buying Bitcoin at whatever, 29,000, or Ethereum at what, 1,800, or DFI at $2.50? I don't know where DFI is right now. Like these are the prices. When you buy it at these prices, with what degree of certainty do you think you can sell it at a higher price? And obviously Buffett has his own kind of measurements, and everyone kind of has his own kind of philosophies. And so that is the main question you need to ask yourself. But then it's not only about, are you able to be quite convinced that you can sell it at a higher price? You also need to put a timeline to it. Are you interested in selling Bitcoin if you buy it at 29? Are you interested to sell it at 40 within the next week? Is this kind of the timeline? Then probably there's a lot of time pressure on that. And then I would say the degree of certainty drops to close to zero, because for Bitcoin to jump over 40,000 right now, it's definitely possible, but I would say it's very improbable. So you would say, I don't have much certainty to buy Bitcoin at 29 and within 1 week sell it at 40. So that is the question great investors ask themselves, right? They don't care so much about buying the bottom, timing the bottom. They really care about, okay, if I buy Bitcoin at 29, Ethereum at 1,800, DFI at $2.50, can I sell this thing over the next year at a 10% gain, at a 20% gain? Can I sell it at 100% gain? And that is the real question you should be asking yourself. What is the expected kind of hurdle? What's the expected kind of rate of return that you are expecting out of your investment? And if your only question is, all I'm worried about is actually not losing money, so all I don't want to happen is I don't want to lose against the dollar. Honestly, I think like investing into Bitcoin is quite dangerous because it's so volatile, right? And for the prices to go below what we have right now, it's just the probability of that is incredibly high. So you need to give it some time horizon, right? So you need to give it some time. And so now comes the very relevant question. Since crypto right now has this high correlation with the general markets, and the question then becomes, okay, when is the general market actually going to turn around? And if we look back, and I mean, I don't know, we can analyze over the last 100 years, and I'm just kind of probably I'm missing like a lot of these crashes, right? And these are just what I come up with the top of my mind. And I'm not an expert of history. This is just kind of, I'm spitting out ideas, right? So let's go back. 2020, we had a massive crash of what, 50%, COVID. It was one of the most aggressive V-shaped recoveries that we have ever seen. And it was purely based on the Fed jumping in and printing shitloads of money, right? So that was the reason why the market started pumping. And so obviously, I don't know. I mean, I don't know when markets hit the level pre-COVID, but I think it took maybe a couple of months, right? I mean, for sure, someone of you has the statistics or the charts in front of you, you know it, right? So it was a couple of months. Let's be real here, right? Maybe it was even weeks, a couple of months. So if you believe the Fed is going to step in again, and I think, I mean, history can repeat. I think generally it rhymes, but you can learn a bit from history and see how is the market reacting. So if you forecast a 2020 scenario, then you should be fairly confident in buying Bitcoin right now, Ethereum right now, DeFi chain right now, because there's a very, 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 very high probability if the Fed steps in that markets will go up actually over the next couple of months. So if your time horizon is a year, 2 years, and you expect the Fed to step in, you should be all over this. Like, this is your buying opportunity by far, right? Okay, but let's go a bit further back. I mean, what was the real significant crash of, let's say, I don't know, let's talk about the general markets, because they dictate crypto at the moment. It's not crypto so much that, like, we're not talking about 2017 right now, 2018, where the ICO kind of got pulled the plug. We're really talking about the general market. So when was the last time the general market really dumped? Well, COVID. And prior, we actually have to go back quite far. Yes, it always had dips of 10, 15%, but it never had these really massive crashes. The last one, financial crisis, 2008. Well, how long did the market take there to recover? It took about, if you look at it, it took about 2 years, if you kind of look at it, maybe a year, maybe 2 years. And obviously, the Fed stepped in. The Fed did some money printing. We had the quantitative easing, right? So that kind of all started. But we did have 1 or 2 years. So if you believe we see more of a 2008 scenario where the Fed sits there and says, okay, we cannot print money right away. We need to wait a little bit. We need to cool off inflation. We need to bring those prices down. But at some point, we will step in. We need to kind of stop the bleeding in the markets. Then you need to have a time horizon of 1 or 2 years. Okay, let's go a step further back. What is the crash prior to that? Was the dot-com crash, right? Dot-com crash, 2000. I mean, there we didn't have the Fed stepping in as aggressive, because the Fed said, well, F you all dot-com companies, we don't really care about you. The market is healthy. And that's always the key thing, right? The Fed especially always looks at the spreads. It looks at, I mentioned this a couple of times, it looks at the bond markets, it looks at the repo, the repurchase kind of markets. It looks at how liquid are those markets? Is there a fundamental issue in the economy? It doesn't really care as much about the stocks. It doesn't really care about you or me. It just really cares about, like you could say, it cares about the banks, and that's actually true, right? So that's what the Fed actually does. It's owned by the banks, so that's what it really cares about. And during the dot-com crash, there was no fundamental issue with the economy. It was really more that those dot-coms just got totally blown apart. And a lot of people actually say it's very similar right now, where you had all this risk on, just like back then. And if you actually go back there, you will see that it almost took 4 or 5 years for the market to recover. Liquidity was completely dry for 3, 4 years, right? So keep that a bit in mind, right? So that's kind of .com. Now we can go a bit further. I don't know. I would say 87, probably the crash prior. Like neither .com, no 87. I can remember. I mean, I'm born in 86, so I got no clue about 87. .com crash. I was 14, 15. I couldn't have cared less about investing. I was all into basketball, and I think at that point, what was on my mind was moving to the US. So completely different kind of focus, right? I had no clue about investing. So 87, I mean, this was just a complete if you actually go back, it's quite interesting to analyze that. It was all about everyone believing that the insurance of like hedging your portfolio would work out, and people completely misjudged what happens during liquidity squeezes. And so at the end, that's what really happened there. The market completely crashed. It did recover relatively fast because there was no fundamental issue. It was just everyone completely believing in hedging strategies to work, and everyone kind of miscalculated that it actually like didn't. And so that's what just completely wiped out the markets. That was 87. And then, I don't know, you can go further back, obviously. Then the world wars come. I mean, there was a lot of times there that were really slow. I think an interesting one to look at is always 1929, because that is the first real crash where the Fed really stepped in. Because I think in 1907, that crash was the reason why the Fed got started, if my history now is correct. And again, it's a long time ago, and I'm definitely not the history expert. But if you look at that, the crash of 1907 was the reason the Fed got started, because back then JP Morgan had to step in and kind of bail everyone out. And he said, I don't want to do this because I'm not going to be around forever. And so someone else has to do it. And then in 1929, actually the crash happened, and this was a complete gambling leverage crash. The Fed had to step in. It actually did a lot of money printing in comparison to like reasonable terms. And if I would ask you how long did it take from 1929 to actually break even again, to reach a new all-time high, it's absolutely shocking. We're talking about 25 years, right? So it took until 1954, sorry, after the Second World War, until actually the market broke even again. So we see those massive crashes over the past, whatever, 110, 120 years. And each of them have a completely different time horizon until they recovered. It goes from months in 2020 to a few years in 1987 and maybe 2008, to a few years, actually really a couple of years already in 2000, to decades in 1929. And the big reason I'm really going back that far is because you have all the shades here, and we tend to forget just because all of us probably started investing. I mean, my first crash was 2008. I mentioned this a couple of times, completely wiped me out, and actually got into debt back then. And I promised myself never to be so stupid anymore. And I think many people or have zero experience or zero knowledge of what happened prior to 2008. Very few of us probably have actually invested prior to that time. So we don't really remember a time when liquidity was dry, when everyone was super pessimistic, when people were really cautious. Very few people actually probably invested during the dot-com years. I didn't, so I have no clue. I can only kind of read about it, listen to people about it, and kind of understand and try to feel what was the sentiment during those years. And it's crazy to kind of look into this, right? I mean, you can look into the 70s as well, which I also think maybe could be a very interesting kind of the 20s, the 70s. I think both is a decade that is maybe very similar to how it is right now. Very high inflation, not hyperinflation, but very high inflation. The Fed trying to taper, the Fed trying to raise interest rates. There always being these speculative bubbles, trying to pull the plug on the market. So, and then people sit here today and they're like, oh, you know what? Like .com, the last crash in 2020 with COVID. I mean, that was over in months. So people sit there and they have this totally, in my opinion, wrong expectation how fast the recovery of that market can happen. Sure, I mean, the Fed can change their tune now in the June meeting and in the next 2 weeks. And they say, hey, you know what? No more increasing of interest rates. We're actually going to leave it at that. And by the way, June 1st, we actually are not letting go of our balance sheet. I think in that moment, I mean, the market would be really confused, but I think it would actually have a massive relief rally, which I'm not sure how sustainable that relief rally is, because then inflation numbers would, again, probably going to skyrocket. But it would have a relief rally, right? But then, and I think that's always what people are expecting. They sit here now and they're like, hey, last time I was there, the Fed always kind of came in, right? I got my heroin dose every single time that like I had these withdrawal symptoms. I got my heroin dose. And I'm just really cautious to kind of tell you that I do think these prices right now are fantastic entry prices. And I would be shocked if over the long term, right? And again, long term, what does this mean? Does this mean 10 years? Does this mean 5 years? Does this mean a year? Long term, we wouldn't be looking back and be like, man, still got some of them Bitcoins sub 30. Like, I think you all know this meme of this one dude on Twitter who was like sniffing coke and sitting there, and he always asks, like, you still got some of them, whatever. And in this case, Bitcoin sub 30. And I completely believe that we're actually gonna use that meme for the times right now. The big question that you just need to answer to yourself is, how emotionally stable are you over the next weeks, months, years, decades, if prices don't pick up right away? Because they actually may not. Who knows? I don't know. I don't want to paint a dreary picture here. I just want to paint a realistic picture here, because I know that everyone here acts like they all know this stuff and they can predict the future. And I'm just standing here and saying, sorry, I have not met a single person that credibly has predicted the future. I have not met a single, including myself. I have no clue what the future beholds. And I have not met a single person who can actually prove that they can predict the future. Everyone is just kind of playing an astrologist here. And so all I'm trying to do is I'm trying to stand here, learn from history, and try to understand, what do I need to kind of prepare myself for? So if I actually think this is a 1929 kind of repetition, which it could be, I'm not saying, I think it's unlikely, but it could be. Am I ready to allocate purchase power right now? And I'm probably not going to make serious returns. And then I'm going to make super serious returns, right? But I'm not going to make serious returns until 20 years into the future. Am I okay with that? And 20 years, I mean, I think most people don't even understand how long 20 years are. But I mean, I'm just saying, right? People talk about a lost decade. Are you okay with that? And if you're okay with that, dude, go all in with the purchase power you want to allocate to crypto right now. I think it's fantastic, right? Or am I only okay in allocating purchase power right now that I definitely want to have out, I don't know, by the end of next year? And then always understand that most people always think they have a longer time horizon than they actually do, right? We all know this example. I mean, you can always play this game and the game is always kind of the same. And that is, how long of a time horizon investing in crypto do you have? And then most people always say, oh yeah, I have maybe 3 or 4 years, right? That's kind of always the next kind of cycle, right? The next Bitcoin cycle. Right. So let's say 3 or 4 years. And I think we all nodding like, yeah, 3 or 4 years sounds reasonable. Okay. How much is the time horizon that you think that other people have? And I was like, oh, other people, I mean, they maybe have a 6 months time horizon, maybe a year, but I would say 6 months. Everyone nodding. Great. So what do you think is likely? Do you think it's likely that all of us agree to these two statements and you're the only one who's the exception? Or do you think we're doing what we're best at, which is actually lying to ourselves, right? And that's what humans are really good at. So I would just be very cautious if you actually think you have this super long time horizon and you have this expectation, because people on Twitter are saying, or on social are saying, hey, it's going to get worse right now, but don't worry. 2024 is coming around the corner, and that's Bitcoin halving, and halving always pumps the price. Why? Why does the halving always pump the price? There's no promise that the halving pumps the price. Sure, inflation drops by 50% in Bitcoin, and that can have massive effects in all crypto, and that in theory can increase prices, but there's by no means a guarantee for that. So, like, if you exclusively invest for that, you may be completely wrong with your investment thesis. Now, I still think there's a very high probability for prices to go up, but that's by no means a guarantee. And so that's why my rant is coming from a bit of a history lesson, a bit of a mindset kind of based here. And I'm talking to you as probably, hopefully, Cake customers, because I also hope that obviously you do have a long time horizon. And it shows. I mean, I don't know how many people on Cake have frozen their funds for 5 years or 10 years. And you don't do this just for the fun of it. You do this because you actually believe in locking up capital long term, obviously because you want to have good returns, but because you believe in the long-term time horizon there. So that's just something, if you have that, I think fantastic buying opportunities right now. Fantastic. I think Bitcoin, Ethereum, DeFi chain, many coins. Fantastic opportunities at these prices. Again, with the caveat on what time horizon. If your crypto investment has to go up over the next 6 months, man, I'm not sure how certain I would be about this, right? If you then really go into the years kind of time horizon, man, I think the probability for you getting some nice returns on that are significantly going up. And I mean, I'm not telling you anything that you probably don't know already. I just want to kind of repeat that because I think it's important to kind of base or kind of remind yourself about that. Comments, Fabio, or anything to add, or thoughts that come to your mind?
Yeah, you touched on, I think the magical word is time horizon. And when it comes to like, what is the best outcome for me to increase the time horizon? So of course I made a few investments that I certainly believe in, otherwise I wouldn't have made those investments. How can I stomach the volatility? So for me personally is right now I'm pretty conservative and I'm holding a big cash reserves. I know that I'm paying the price when it comes to inflation, but it gives me the confidence and the stability that it doesn't matter what happens, I can stomach the volatility. So if we have more downside, no problem. I'm just going to wait a bit longer. If it takes 4 years, fine. If it takes 6, fine. So that I'm positioned myself well, that I can stomach whatever outcome there's to come. And of course, if I'm planning to buy a house or something like that within the next 2 years, my capital should probably not be in a risk-on asset. And here it's more or less the base camp that I set for myself, so I can stomach the volatility and the outcomes that are about to come. For me, when I look from a macro perspective, the things that I'm currently watching is we had negative GDP growth in Q1. We're very likely to have negative GDP growth in Q2, which would mean this is a technical recession. So 2 quarters in a row with negative GDP growth is a technical recession. Also a correction of, I think, to 22% or 26, I don't remember the exact amount, is also a technical recession. What could give a little bit of light at the end of the tunnel, and one of the things I'm currently watching is, did inflation peak? So we had numbers, I think 8.3, 8.5 CPI. If next month or next quarter, these numbers are dropping, and we have there is an indication that inflation peaked. This, in my opinion, this could lead to a relief rally. If this is sustainable
Agree.
or not, I don't know. But like, I always question myself, what would be the maximum pain? How what scenario would play out that most people lose the most amount of money? And in my mind, the scenario that would be the most painful would be a super strong relief rally, almost back to all-time highs, that lowers everybody thinks, oh my god, we're going higher, everything is fine, the Fed actually managed to keep inflation in the box, and everything is great again, and everybody allocates risk on, and then the big drawdown or the recession or whatever happens. I think this would be probably the maximum painful outcome. And really hard to navigate as well.
I love that. I mean, I couldn't agree more. I love those points. I want to maybe add a few thought processes or questions that I keep getting or that I keep seeing. One, for example, on social media is always, I get these price questions, right? So at what prices would you buy? At what price would you give up your hope on? So one question is, for example, what price would Bitcoin have to drop to that you would say, that's it, I'm getting out of Bitcoin? To me, such a question makes absolutely zero sense, because the question is, again, is a bad question. The right question should have to be, what would happen to the underlying value for me to get out of Bitcoin? To be honest, if I would assess the value of Bitcoin, and I'm not saying but in absolute terms, because I think valuing something so emotional as Bitcoin in absolute terms, I think is almost impossible, right? So I know that people try, but I think it's almost impossible. I think what's way easier is to value it in relative terms, which means, how has utility changed? How has the number of people in this space changed? How has rarity changed? So these are the three driving factors for the value of Bitcoin, or for the value of anything in that sense, right? And then I could say, you know what, to be honest, probably value of Bitcoin over the last couple of months hasn't really significantly changed. I don't see why the utility should have changed. I don't see, sure, a little bit more Bitcoin were printed, but who cares about this? The number of people in the crypto space or in Bitcoin hasn't really, like, it didn't go up, it didn't go down. I mean, kind of the same. So what changed, right? I mean, it's not like regulation changed or it became easier or better. Like, sure, some people, the Bitcoin fans will say, oh, it definitely went up. The bears will say, oh, it definitely went down. I don't know, let's be neutral here. I think the value didn't change, right? So now the only question that becomes, was Bitcoin overvalued 6 months ago, or is it undervalued right now? But one thing we can agree is, it does not really, the investment thesis for me, if I had invested money 6 months ago, there's no reason for me to sell right now, because it means I was fine with the price to value ratio 6 months ago. That means I should be even more ecstatic about the price to value ratio right now. It makes no other sense, right? And so the other question is also, if you understand this, it does not matter if you are holding or if you're buying. It's actually the same mechanism in a liquid market. Most people don't understand that. Most people always think there's a difference in the decision of whether you should hold something or whether you should buy something. It's actually the same decision, obviously, with putting taxation rules aside. But that's a key question, right? So the question on at what price would you sell something, actually it should be more on what price to value ratio would you sell something. And if I assess Bitcoin as its value haven't changed much over the past 6 months, if you're holding Bitcoin right now, that makes no sense to even consider about selling it, right? So I think that's a very key part. The other part is where people say, hey, at what price would you sell something, right? I mean, people would come to me and say, at what price would you sell DeFi chain? At what price would you sell Ethereum? The price is pretty irrelevant, to be honest. It's really more about price to value. And if I've been holding DeFi chain 6 months ago, that means I was happy with the price to value ratio back then. I'm even happier right now. And so don't always look at just at the price. And I think that also helps with time horizon, right? It's just like your real estate. Your apartment, if you own real estate, you can identify way easier with that. I guarantee you, your apartment, if that thing was liquid, if that thing was fungible, that apartment would have dropped massively in price over the last 6 months, just like the public markets did. And you know how I know? Because all the REITs, real estate investment trusts, they dipped significantly. So your apartment building, your property also dipped. You just don't see it for one simple reason, because people in real estate, since they don't have an emotional price, they tend to just not sell if they think the price that they're getting right now is not a good price. And this is very different how in the public markets, because anything that's liquid in a liquid market, people don't think so much about value. They think way more in price terms. When real estate, they think way more in value terms because they don't see a daily price. So your price in real estate, if that thing was liquid, would have dropped significantly, just like any REIT out there, and you can just look them up, and they all kind of dropped massively. The reason why you don't care is because you focus on value when it comes to real estate. And that helps with time horizon, because value doesn't just jump unless there's something massive. So if there were, like, let's hope not, but if there were a nuclear bomb where you live, clop, knock, knock, this is not going to happen. I'm just making a really shitty example because I don't come up with a better one. There was a nuclear bomb in this very moment, the value of your real estate will drop probably by 90%, maybe 99%, right? So it's a very obvious kind of question that, don't worry, it's not going to happen. But I just need to come up with a better, with an idea. And I know it was a stupid idea. But that's just a key kind of concept here. So other than that, like, don't focus on price as much. The other thing, right, is, and I recently in a video gave that example about the monkeys and the bananas. And I just want to use that same example because it's so true. So the example goes this way. And this is a study that was being done not only on monkeys, but actually with many, many other animals in different setups. The results were always the same. And the way it works is the same way. You give a monkey a banana, the monkey is super happy because it just got a banana. The next day, you give the monkey one banana, you wait a little bit, and then you give the monkey a second banana. The monkey is ecstatic because he didn't only get one banana like yesterday, now he got two bananas, right? So more than yesterday. The next day, you give the monkey one banana, two bananas, three bananas. The monkey is like totally, is flippish, right? The monkey's getting three bananas. 2 days before it was just one banana. Yesterday got two bananas. Today it has three bananas. My goodness, life is awesome. The next day, you give the monkey one banana, two bananas, three bananas, four bananas, five bananas. But then you take a banana away. How do you think the monkey reacts? The monkey is completely pissed. The monkey is pissed because the reference is not yesterday 3 and now it's 4. The monkey says, fuck me, I just had 5 bananas. You took one banana away. Why did you take that banana away? And this emotional example is applicable whether we try this with mice and sugar water or you try this with humans. It's always the same thing. Because if you think about it, over the last 2 years, think about how many bananas did you have 2 years ago with pre-Fed giving you so many bananas. Now, I hope you understand bananas are dollars, but it doesn't really matter. So the Fed 2 years ago realized, oh my goodness, there's a liquidity crunch. We need to start distributing bananas to everyone. So for the past, let's say, like until half a year ago, the Fed started handing out bananas like crazy. And all of us got so used to being in such a surplus of bananas. And we all thought, oh my goodness, some of us thought we have $100,000. Some of us thought we had $10,000. Some of us thought we had millions of dollars, 10 millions of dollars. We had bananas en masse. And then suddenly the Fed says, you know what? Let me take some bananas away again. And it started removing bananas out of the system. And we are sitting here and we're looking at, hey, why did you take that banana away? That's super unfair. We're in a super bearish sentiment because 3 months ago, I had 5 bananas and now I only have 4 bananas, even though if I just compare this with 2 years ago, I had only 1 banana. But I'm not happy with my 4 bananas now because I have a new reference, which is the 5 bananas from 3 months ago. And that is a very, very emotional trickery that we play to ourselves, where we're basically using these arbitrary measurements. Where are we year to date? Oh, we're down year to date. Oh, we're up year to date. We compare ourselves to the all-time high that we are having. And this is actually a really, really bad trickery that the mind plays in ourselves, but it's how we are. Instead of going and saying, I have no chance in being a fantastic banana trader. These bananas just come and go. And if I am not the most amazing trader out there, and let's be real here, you are not. The odds of you being the most amazing banana trader out there is 0. Because in this whole world, the only desks that are successful in day trading, that really manage to get the tops and the bottoms, man, there are maybe a handful, maybe 2 handful algo traders out there. And most of them go belly up every once in a while, right? The medallions of this world, they are a dime in a dozen, and that's it. There's so few traders out there. The majority, with majority, I'm talking about 99.99999% of us out there, we are not going to be able to time the bottom. We're not going to be able to time the top. So we just have to live with that we have those volatility spikes up and down in our purchase power. So if you sit here now and you're like, man, 3 months ago, I had so much money and now it dropped by 40% or dropped by 50%. Fair enough, I understand it. But you're picking this arbitrary point in time simply because you had these so many bananas 3 months ago. But compare this to a year ago, to 2 years ago, to 3 years ago, to 4 years ago. Put time horizon to it. And then suddenly you start realizing that hopefully, right, if you didn't invest in Terra or in Luna or UST or something, but hopefully you have more purchase power now than you had 2 years ago before the Fed started handing out all these bananas. So we are before day one. And it is such a key concept that I always remind myself, because trust me, my purchase power also went down over the last 3 months. So if I would sit there and say, oh man, 3 months ago, my purchase power was here and now it's there and this sucks. Hey, I need to realize that my purchase power over the last 2 years, it went up exponentially, right? And if I compare this over the last 10 years, it's absolutely bonkers. And now always the same issue that people tend to shrink with their time horizon. For some weird reason, we tend to not look at it over years or a decade. We tend to love looking at it on a month by month basis, forgetting that we are incapable of day trading or monthly trading those things. It's just not going to happen. And so that's just something I want to give to you. Like not looking at only price, look at value, and always think of that banana example. I think it's such a vivid example. It sticks with me all the time.
I couldn't
Yeah,
I
Fabio.
couldn't agree more. You pointed this out very kindly to me a few weeks ago, and you said you're really an investor that buys a price. And it's also because, and I guess this is a little bit of a sickness that lots of us in the crypto space have. We are looking at charts all day. Not only do we have our trading view or our coin market cap, but then we also spend time on Twitter or on Reddit and looking at all the technical analysis that all the fortune tellers in the space provide us, or technical indicators. So we are focusing so much on the current price, and we are really buying a price. It's also the start of this discussion when we started this Twitter space. I was referring to a few indicators, and it's I think you made a great point. It's impossible to buy a bottom or to buy a top. Like I can maybe have two references for that, and I told those to you as well a few weeks ago. So I'm dollar cost averaging into Bitcoin since years. So for me, it was I came into the space in 2015, made every mistake there is to make, and I have since then, since I entered, I'm dollar cost averaging. There is two occasions where I stopped my dollar cost averaging bank transactions, and one was in December 2018, so the absolute bottom. I thought, oh my God, I made a big mistake. Everything is going away. I didn't sell, but I stopped my dollar cost average. And the second one was in March 2020 when this whole COVID thing happened. I remember the moment very vividly. I was sitting with my phone in my hand on a chair, and I was like, oh my God, it's all gone. And so these 2 months were the only 2 months I stopped, and these were the months that was the absolute bottom. And when we were in October or in November last year at 69K, I was leveraged long. So I leveraged long the top, and I didn't scale into the bottom. And I have so many friends, like I spend so much time in chat rooms when it comes to TA or trading or anything like that. And so many people were planning to sell the top. So they experienced this first cycle in 2017. They were like, oh, I know how this works. We have this blowout tops. We have these 85% corrections. Easy money. And everybody was planning to sell the top. Everybody was waiting for 100K. And like, I don't know any single one of you here. I know a few people that are in this Twitter space, but ask yourself the question: were you planning to sell the top, and did you actually sell? And my estimation, about 80 or 90% of you were not able to sell the top. All of us were waiting for 100K or 180K or even higher numbers, and all of us are still sitting on our bags. And it's the same right now. Do you think that you will manage to time the bottom? Is the bottom maybe already in? is it still to come? It's impossible. So yeah, for me, it's still this time I'm not gonna stop my dollar cost average, even if we drop a little bit lower. And I try to trick my own emotions, and instead of like experience the fear and I try to double down, go against my own emotions. But at least that's the plan I have in my mind right now.
I love that, and I think especially that let me also give you another thought here, right? And again, I just want to give you a couple of thoughts, not how you should be thinking, but I just want to give you a couple of thoughts from my point of view. We all know the answer to this, and let me just give you the question, and we can answer it to ourselves. What generally has a higher payoff? The things that are easy or the things that are hard? We all know that things that are hard, they generally, not always, they tend to have a higher payoff, right? That's just how it is. Why? Because in general, people tend to gravitate towards things that are easy. And so because everyone gravitates toward that, rewards kind of get diluted over this entire mass. And so those that like walk the path kind of less walked or kind of less taken generally tend to have higher returns. We all know that. So let me ask you this. What do you think is easier? Black and white thinking or actually thinking in shades, actually kind of looking into the differentiation of a topic? And we all also know that this polarization, this black and white thinking is what's way easier. It's way easier to be totally anti-crypto or to be like a total crypto maximalist. Or it's a lot easier to be anti-Bitcoin or to be a Bitcoin maximalist. Why? Because you don't have to think. All you have to do is you have to say, oh, you know what? I love Bitcoin. And this is the only thing that has value. Nothing else has value. Or it's a lot easier to go the other route and say, oh, Bitcoin has zero value. This is just bullshit. This is a Ponzi scheme. And I mean, if you speak German, I was just on Stern, which is like a humongous TV channel in Germany, and I had to debate other people on why Bitcoin. Like I had to kind of defend Bitcoin, and I mean, I wanted to defend Bitcoin, but these other people, they were just kind of totally irrationally like just hating on Bitcoin without any substance. It's incredible, right? So it just highlights how difficult it is. And you know me, I'm not a Bitcoin maximalist by far. I know Bitcoin's weaknesses and I know its strengths, right? So I tell you, it's so much harder to have a kind of graded view on things and not this kind of polarizing black or white view. Now, as a great investor, though, you many times actually have to take that probability percentage view and not this all or nothing view. And I think still, one of the kind of easiest tricks in the box is to actually dollar cost average. Because when you dollar cost average, by definition, you don't go all in. Because by definition, you dollar cost average. And that is a very, to me, that's still kind of the last trick in the box that you have. Like you diversify automatically, you don't go all in, you don't go all out, you remove your emotions. Emotions generally as a great investor are one of the most toxic things you can have. And so just always kind of remind yourself about this. If whenever you take this extremist view in one or another direction, I'm just saying, you're probably taking the easy view, right? So you haven't thought this through. You haven't put in the effort. And many times, this actually means that you're not taking the best decision. Many times you're taking a weak decision. This doesn't mean that you don't come to a great outcome. Many times an extremist view can have a very favorable outcome, right? But it most of the time, it's actually not the attractive decision. It always either needs a lot of luck or bad luck or whatever for it to actually yield something big. And so just kind of keep this a bit in mind. And so I would highly encourage you to look at these prices right now. Ask yourself, what's your time horizon, all that, and then decide, is this a great kind of time to continue my dollar cost averaging, to start a dollar cost averaging, maybe to pull back on the dollar cost averaging because you really feel you're already overexposed and you just get nervous, or you're like, hey, you know what, I was waiting for this. Like I was thinking about buying Bitcoin at 60, and then I was waiting at 50, and then I was waiting at 40, and now we're at 30. Yeah, sure, it may go down to 25, or maybe it goes down to 20. But I mean, these are fantastic prices in the long term. And so that is kind of the approach I would highly recommend you to take here.
I couldn't agree more. Like for me, it all comes down to personal finance. So like earn more than you spend, then there is a smaller amount that you can save. Get your savings in order. If you're younger, you probably, and if you're employed, you probably can make it on 90 days or 180 days. It depends a little bit where you live and how you're covered from like social services and insurance and so on. For if you're a little bit older, you probably should have a year or two in cash reserves. And if the personal finance part is in order, it's so much easy to stomach volatility. Then you can just forget about your investment, and it doesn't bother you if you're in the red for a year or 2 years or maybe even longer. The problem I see mainly, and I see this a lot on Twitter, and I also see this a lot on Telegram, even within my own friends and family. These are people that are like I'm in my 30s. So at some point, I probably want to buy a house. I'm renting since 13 years or a little bit longer now. And like a lot of people in my age, we want to buy a house. And you, of course, you want to be there as fast as possible. And I get a lot of questions, and I see that people are like, okay, but if I just allocate this into Bitcoin and it does a 2x or 3x, I will be able to buy a house within a year or in 2 years. But if this is your strategy, if your time horizon is low and you actually want to spend the money on, I don't know, a car or a house or something within like the next few months or years, you probably should not be in a volatile asset like Bitcoin. You probably should allocate super passively, like, I don't know, a 60-30 portfolio or something, or maybe even a little bit higher in bonds or whatever, like or in cash. So for me, it comes down to time horizon and personal finance. Yeah.
I couldn't agree more. I mean, totally. Yeah, Fabio, I think nothing else to share from my side. I think we gave all the value nuggets on the current market, current ideas. Anything from your side that there is to share?
No, I think we can touch on Cake products and Cake the company and all things related to Cake in a Twitter space next week, where we can give you some teasers, some timelines on what's about to happen. We have big things planned. This one was mainly focused on general markets. I think we touched on all important points. If you missed the beginning, you can find this on Spotify, Apple Podcast, YouTube. And there's also a live ticker where the most important points are summarized.
Yep. Last but not least, we have a super conservative treasury at our company. Even if crypto basically went to zero, we would have 3 to 4 years in runway with the current setup, with the current marketing expense, with the current headcount. So if you want to work for a company that does have that buffer, it doesn't matter if you're in marketing or tech or ops, like we have pretty much any role kind of open, then please apply, go to cakedefi.com/jobs. And yeah, look for all I think we have close to 30 roles open. We're now close to 130 team members. We want to be 200 by the end of the year. So yes, definitely still some growth here. 2 people approximately per week that we want to hire. Then reach out, apply. We would prefer you to work from Singapore, but we are also open for remote work. Depends always a bit on the role and your profile. We're also open to relocating you to Singapore. So yeah, just check it out. And other than that, thank you so much for tuning in. Thanks so much for the support. Obviously, if you're not a customer yet and you're not getting cash from your crypto, I don't even know what to say anymore. I mean, if not now, then when? I mean, this is like no-brainer here. Yeah, then go to cakedefi.com, sign up, get cash flow on your crypto. And otherwise, I hope you are subscribing, you're sharing, you're liking, you're doing all the social media stuff. I think you know how it works. And then I'll hear you together with Fabio next Tuesday. Fabio, thank you so much.